Welcome back to the channel, everyone. Today I want to talk about the real way to beat the hedgies. Buying and holding doesn't seem to be doing enough. So what can we do to beat the hedgies, and how do I know that we're winning? So stay tuned and let's make some money. And now I want to dive straight in with the key information. So you may have seen Lou's tweet from the other day that said all that buying volume and not even a dent. Obviously on Friday, the hedgies managed to drop the price of AMC below $21, all the way to around the $17 to $18 mark, and we couldn't put a stop to it. You may remember that there was a small group of AMC investors that were planning on buying tons more shares at around 2:45 PM. The volume did go up, but it didn't help push AMC's price up. And Lou says once again, retail was shown the game is rigged. All those buying orders will now be spread over several days to suppress the AMC stock. It's now up to you, Gary Gensler. And he also said that AMC is the ultimate managed event with 54% of all trading going through the dark pool. Lou also reposted a comment that he received on one of his videos that said he watched AMC's volume steadily climb from 55 million shares traded to 61 million shares traded during the 15-minute time period from 3:30 PM to 3:45, and the price just hovered around $18.20 the whole time. Apes managed to buy around 6 million shares in a matter of only 15 minutes, but yet the price stayed stationary. So where did all that buying volume go? And obviously Lou thinks that the hedgies are now spreading that buying volume over a few days. Lou thinks that all that buying isn't immediately impacted on the market, and instead that buying volume is spread. The comment also said from 3:45 PM until 4 PM closing bell, the volume then increased from 61 million shares to 64 million shares, and the price closed at $17.97. So with only 3 million shares, the hedgies managed to drop it over 20 cents. He said our little experiment, I would say, was a success, and says it all. It shows the power that we have and also shows the devious power the other side has in comparison. Yes, we can get 6 million shares purchased in a matter of only 15 minutes, but it just goes to show how much power and how corrupt the other side and the hedgies really are. Now, I do personally agree with this, and I don't think that buying and holding is enough. Back in January, when AMC and GameStop ran up the first time, apes didn't hold 80% of the float, and actually there weren't many apes that purchased AMC back in December of 2020 compared to the amount of apes that hold AMC now. So how can we run in January, but we can't run now when apes are holding 80% of the float, 90% of the float, and potentially the entire float many times over? And I think ultimately, while buying and holding will help, and it will help dry up the liquidity, it's not enough to cause the squeeze on its own. We need to come at this from a multi-pronged attack. We need the buying and holding, we need those options to cause a gamma squeeze, and we also need the wider market crash to cause liquidations. Guys, if you're getting a little bit worried holding your AMC shares in Fidelity after all the recent glitches and the fact that Fidelity actually supports short sellers, Moomoo are currently giving away a free share of AMC on top of their usual 5 free shares. All you have to do is sign up to Moomoo using the link in the description below and make your first deposit. When you open your account and make your first deposit, you get your first 2 free shares valued up to $3,500 each. If you can deposit $100, then you also get a free share of AMC on top of that, and if you can deposit the full $2,000, then you get an additional 3 free shares on top of that. That brings you to a total of 5 free shares valued up to $17,500 and a free share of AMC. Moomoo is also a brilliant commission-free broker that doesn't make its money from payment for order flow. Moomoo and Futu make their money from margin interest and from payment fees. That way you don't have to worry about your trades going through sketchy dark pools or being given to Citadel. So guys, be sure to sign up to Moomoo using the link in the description below and make your first deposit. But obviously, as you would have seen from my videos from Friday, it seems like the market crash is already upon us. Blake Strack here tweeted saying, "Is it happening, AMC? Is this when a broad market downturn exposes the deep liquidity crisis which triggers margin calls on over-leveraged AMC hedge fund shorts? I'm buying puts on everything but AMC stock." Now, I personally think this is exactly what's happening. Obviously, the Nasdaq is down over 7.5% on the week, and it seems that the crash is only getting started. we know that there's a massive liquidity crisis because hedge funds are massively over leveraged, and when they can't meet those required margin calls or those margin requirements, they will get margin called and their positions liquidated. And obviously, because a lot of these large hedge funds have over-leveraged both their long and short positions, they're massively over-leveraged on the Nasdaq as a whole and also over-leveraged on the AMC shorts. And therefore, obviously, as the Nasdaq and the rest of the wider market crashes, those longs will be liquidated, as will their entire portfolio, and they'll be forced to cover their AMC shorts. And this poster on Reddit explains this scenario perfectly. He says if the market is plummeting and you're losing your ass because you can't sell off your long positions because you've posted them as collateral for your over-leveraged AMC short positions, that you also can't close because you've oversold AMC in an attempt to trigger a sell-off because 5 million sociopathic apes bought up the float after you overshorted it on margin, well, that'd be quite the pickle. You've got all of these large hedge funds that can't sell off their long positions on stocks like Apple, Amazon, Microsoft and Google because they've already posted those positions as collateral for their over-leveraged shorts on AMC. And they also can't close those over-leveraged shorts because closing those short positions at such a dramatic unrecognised loss would effectively bankrupt the hedge fund. So what else can we do to help the AMC squeeze? Obviously we can buy and hold, we can also wait for the market crash, but what else can we do? Well, the other thing that we can do is help with this gamma ramping and help with the gamma squeeze. That way, when AMC does start moving again, we can really build momentum and propel AMC to new highs. Now, obviously, the hedgies won the battle on the 21st of January, pushing pretty much all of our call options out of the money. Therefore, because AMC was falling, there was no momentum to build and no gamma squeeze to be had. But there's still going to be many more battles. The next one is on the 28th of January, but the next promising one with a larger position of call options is on the 18th of February and also here on the 18th of March. And therefore, if we can build our call option positions at the next promising date, maybe the 18th of February or the 18th of March, then we can beat the hedgies at their own game. For example, if everybody buys the $145 strikes, then there's no way we can build momentum. There will just be a flat nothingness of options and then everything at the $145 strikes, and therefore no gradual momentum will be built. Therefore, we need to focus on buying the options that are already in the money or that are at the money or that are near the money, not the ones that are massively out of the money. But I think what we can also do is target our fight on the hedgies at times when we're typically the weakest. And I think Jim Cramer may have actually given us the answer. Obviously, when the bell rings, retail comes out strong with tons and tons of buy orders that they queued up throughout the night. But obviously, this is when the hedgies are also at their strongest and manage to punch us down and AMC doesn't take off. And then obviously somewhere around the middle of the day or somewhere slightly after midday, the hedgies go on their short laddering rampage and pull the price of AMC down $1 or $2 or even $3 every single day. But I think Jim Cramer may have just given away the hedgies games. He says memers, the most hated man in the world, also known as Jimmy Chill, says don't waste your firepower on GameStop and AMC until about 2:45 PM. Now, I think this is something that's really interesting. Obviously, as I just said, retail typically comes out the gates very strong, buying tons and tons of AMC as soon as the market opens. But then, towards the end of the day, the apes take a bit of a back seat because they've already bought their new AMC shares. And as Jim points out, 2:45 PM is usually the hedgies' power hour, where they then retake control of AMC and crush the price. And therefore, if we can save some of our firepower until 2:45 PM, we can fight the hedgies when we're typically at our weakest and when they take over the control. And obviously, if we can fight them and beat them back at 2:45 PM, then we can effectively control AMC all day. And I think this is exactly what we need to steadily push up the price of AMC while the market is crashing. And now I also want to talk about how I know that we're winning and how I know that this will work. And the answer is because Webull are lying and everything that's been said so far is coming to fruition. Now you may say, hang on Tom, what do you mean Webull are lying? Or you may have seen this chart, which is the position cost distribution that's published on Reddit. This chart was posted here on the 19th of January 2022, and you may have seen the same chart posted in December and November of 2021. Now this obviously shows where the apes are holding their AMC. Many apes purchased AMC between $50 and $60, but many apes also purchased between $40 and $50, and also a few apes also purchased between $20 and $40. And you could see that on the 19th of January 2022, only 0.19% of apes held a profitable AMC position. Because obviously most of the apes are here buying in the 30s, the 40s, the 50s and the 60s, and very few apes comparatively purchased under $18 a share. But what you may not have seen is this photo taken only a day later on the 20th of January 2022. Apparently overnight, every single ape that was holding AMC above $32 magically seems to have sold. Apparently tons and tons of apes are holding AMC at $19, $20, $23 and $28 per share, but apparently no apes, or basically zero apes, are holding AMC any higher than $32 a share. Again, this is obviously some kind of manipulation or lies from Webull, trying to convince other apes out there that everybody else has sold their AMC and that you are theoretically the only ape still holding AMC above $30 a share. Now obviously you and I know that's absolutely wrong, and the majority of apes purchase their AMC in the 30s, 40s, 50s, 60s and even $70+ per share, and none of those apes have sold. Webull is trying to convince you that everybody else has sold their AMC and no more apes are holding AMC other than you and other people that purchased around $20 to $25. But obviously you also know that this is a massive FUD campaign pushed by Webull and probably somebody else convincing Webull to manipulate their data to try and again convince you to sell your AMC. As Apish says, bro, they are manipulating the position cost distribution on Webull. I asked Webull about it and they said we're looking into it. Obviously there was no sell off on AMC for this to happen one day apart because obviously the apes aren't selling their AMC. And not only that, but all predictions and everything we've said so far over the previous 12 months is now coming to fruition. The price of AMC is dropping and the hedgies are trying to push us down, just like we've been saying they would for the last 12 months. It's finally happening because they're trying to convince us to sell. On top of this, crypto is crashing, as we all knew it would, and have been saying for the last 12 months. Obviously there's so many similarities between crypto crashing and then a few days later AMC and GameStop running. Obviously the hedgies are trying to pinch liquidity from crypto to meet those margin calls or to use cash to try and kick the can further on AMC and GameStop. The stock market is also crashing and entering a bear territory, as we all knew it would, and as I've been saying over the last 3 or 4 months, I've been calling this market crash for some time, and it's finally coming to fruition. Mainstream media attacks are intensifying, and AMC glitches are happening more frequently than ever before, as we all knew they would. And again, more of the float is being bought up by institutions, but not just by institutions, but by AMC apes as well. The AMC apes are still buying AMC, but so are the institutions. The institutions know that AMC is going to squeeze, just like I've been saying all year. Obviously, the full set of 13F filings aren't out, and when they are, I'll be sure to keep you all up to date with the movements. But we're already seeing funds like Wealthfront Advisors practically doubling their AMC shareholdings, adding an extra 142,000 shares. Guys, be sure to let me know down in the comments below what you think the real way to beat the hedgies actually is. And as always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.